When it comes to tech, we're seeing Netflix holding on to gains made earlier in the day. Apple, Facebook, Amazon all ending in the green but off their session highs. Google ending slightly down. Why is tech doing well, but China is not as well as the broader U.S. markets?
Yeah, the situation in China is really, something that's just coming to the forefront with their liberalization of the currency. But in fact, there's been a tinderbox brewing there really for years, as the Chinese currency has been linked to the dollar, which has been a juggernaut. So at this point in time, with their economy slowing down and then moving to liberalize the currency, it's created a huge imbalance. And against that backdrop of their falling stock market and slowing growth, has been very unnerving for the markets.
Now, Jonathan, you came out earlier today saying now is the time to buy. Why?
Well, first of all, I think that the underlying fundamentals here are really disjointed or separated from the markets. There's no single news item that is jolting, that should be having this kind of a jolt. And when you see other periods, if you go back, when you have this massive spike in volatility and quick selling, the market tends to snap back relatively quickly. And what's important is those companies that have led going into the downturn tend to do well in the 1 week, 1 month, and in fact for 6 months after the market turns around. So even if you miss the bottom, investing in those previous winners tends to be a winning strategy. And if you look today, that's exactly what happened.
Now, Glenn, I love that you're here because you see the big picture. You also see what's going on in the real estate market, but you also know what's going on in the private tech community. How is the volatility in the broader markets affecting you?
Well, I think there's two dimensions, as you said, and the first is in the housing market, volatility scares people. They worry that they should put off this big purchase when they see markets going up and down. A lot of them are selling stock to be able to afford houses. They were already concerned because we saw over the past 4 months demand really starting to falter. So the housing market has been the mainstay of the U.S. economy over the past 2 years, and it's just topped off over the past 4 months. And then in the tech markets, what we've seen is people just saying month after month, this is crazy, this is crazy, this is crazy.
This is crazy.
It is crazy where private valuations have been so far from public valuations, especially for companies that aren't making money. And so with some of that money coming from Asia, really driving the valuations higher, I think you're going to see some rationalization where the unicorns in particular are going to be affected in their valuations.
Okay, so let's talk about that. Bill Gurley of Benchmark Capital, longtime former tech equities analyst, came out with a big warning earlier last week, and he came on the show. He talked about it a bit more in depth. Take a listen to what Bill Gurley had to say.
I think we're seeing a sentiment shift, right? We've been, for the past 12 months, if you were to judge, if you would say, have internet investors been optimistic or pessimistic or where they are on that scale, I would argue they've been, kind of pegged to the right rail, especially in the late-stage private market. And so whenever you're there, there's only one way to go, which is down. And now, whether it's the Chinese economy or whether the Fed's going to raise rates or any of these things that raise questions, they cause that sentiment to drift back towards the center.
Gurley there with my colleague Brad Stone, who is filling in for me. Do you agree that investor sentiment is starting to shift?
Absolutely.
It hasn't already. I mean, it's...
You talk to investors today who are paying more in the private markets for a stock that they would buy in the public market. The same investor would pay less if that company were public. And it's only because they don't have to mark the asset to its current valuation. And so that just creates that mentality of why are we doing this? And then when you see this much volatility in the market, everyone starts to take a step back and really think about who are going to be the winners, where do I want to invest, who's going to generate profits, because that is the ultimate dictator of what's going to be valued in the market.
Jonathan, what does this mean for public tech stocks?
Well, the appetite for growth, I think, is enormous right now. I mean, the big issue is if we are in a slower economic growth environment, whether it's because of China or other issues, which I think is the case, then the amount that you pay for a company that's able to deliver faster revenue growth should be substantially higher. And I think, in fact, healthcare companies, new tech stocks, and we could argue whether Microsoft is a new or old tech company, even innovative consumer brands, I think that these stocks are actually undervalued, even if in certain cases they're trading expensive. And a lot of these names are actually trading at a discount to the S&P, even though they have substantially faster growth.
All right, Robert, China, Shanghai index down 7% yesterday. What's going to happen when the markets open there in a few hours?
Yeah, well, we've had a break in the Chinese stock market. It was consolidating, and it's broken down. It looks a lot like the correction that we had in Chinese stocks almost 10 years ago. Obviously, they're trying to take steps more aggressively, cutting interest rates last night, cutting the reserve requirements. But it's not clear that the fire's out. There's continued to be pressure on the currency in the longer-dated forwards. And so, no clear sign of a change there yet.